All right, perfect. So we are now recording. Welcome everyone to this one-day community event. I already gave my brief intro, so let's dive in to our guest this evening. So Tim Chambers, seasoned serial entrepreneur and impact investor with over 20 years experience in finance, agriculture, and renewable energy sectors in emerging markets. Tim has founded 3 successful businesses, although I counted 6 on your LinkedIn profile, so I want to fact check that in just a sec, Tim. He's also raised tens of millions in capital. He's advised multiple enterprises on growth and investment strategy. And his current venture, Offgrid.Finance, is a fintech platform that enables Kenyan Cleantech SMEs to access capital quickly and effectively, bridging the financial gap for clean tech and accelerating Africa's transition to a low carbon economy, which sounds absolutely amazing, Tim. So, Tim, welcome to this one-day community event.
Thank you, and thank you so much for such a nice introduction. Since I don't spend a lot of time talking about myself, I'm really pleased that you did all of that.
It's a treat, isn't it? It's always nice when someone kind of puts you on that pedestal. But honestly, Tim, you did not make it difficult whatsoever. Your track record, your profile absolutely speak for themselves. So kudos to you, my man, on all this that you've accomplished. So well done.
Well, thank you so much. And I was just reflecting a little bit, of course, on the journey, and what I realized that it's probably been about 15 years ago since I did an actual fireside chat. You know, in the olden days when we actually did
No
these things
way.
literally around a fire. And
Oh, wow.
I was in Vermont. For those of you that know the US, it's a beautiful part of the world. And I was at a place called White River Junction with the Sustainable Food Lab, and a bunch of VPs from large multinationals all sitting around talking about how can they make their supply chains, global food supply chains more sustainable.
Wow.
And it
That's
was
amazing.
actually, these type of events, I think can be very inspirational. So, even though I don't spend a lot of time talking about myself, I appreciate the opportunity, obviously, to as well share my journey in the hope that,
Tim, this is
it's
even more
interesting.
exciting given that it's such a rare opportunity to sit down and interview you. So I love that one. I just have to check, was this 15 years ago? Was this an actual fireside, like round of fire?
Yeah, it was literally. So we would do
That's
this
so cool.
retreat with about, I don't know, 50 of the world's biggest food multinationals, and then plus advisors and others that were working. I was working in the not-for-profit industry at that stage.
Yeah,
And so they would bring everyone together for about 3 or 4 days, mainly like VPs of sustainability and like that type of level of executive, to come together in like a space, in like a safe, non-competitive space, to talk about how you can do things differently. And that's been a
amazing.
big part of my inspiration around how to make a difference. It's always about who you work with and how you're
That
able
knowledge
to
sharing.
leverage resources and kind of do more than what you could do by yourself, I think is kind of the idea.
Absolutely. And that is very much the one day spirit. So, with that, setting the tone for our conversation here, Tim. All right, let's kick off. Obviously, 3 companies mentioned in your bio. I counted 6 on LinkedIn. So, let's first of all clear that up. How many companies have you actually started, Tim?
So probably the way that I would contextualize the first few startups that I built was more from an entrepreneur. They don't talk about it that much these days, but I've been lucky in my career that I've had a few opportunities to work in well-resourced organizations where I had a lot of space to solve problems. So the first one that I set up was in the early 2000s, when kind of online property lettings and things like that were just starting to take off. So I built a letting property rental platform for one of the UK's largest real estate owners.
Amazing.
And
This
then I
was your
moved
first
into,
venture.
yeah, and then I moved into the not-for-profit space more at an international level. Obviously, I'm from Zimbabwe. I grew up in that background, so that's always been where I've wanted to build my career. And so I built a few companies also from an entrepreneur's perspective, to solve I built a platform, a knowledge market, kind of a knowledge exchange market that we use a time bank so that you could get expertise without having to pay cash for it. So it was a kind of a circular economy, but from a knowledge perspective. And a few other, kind of ventures like that. And then I properly started my own career as an entrepreneur in 2012. And I set up two companies. One was a spin-off, social enterprise spin-off from the international not-for-profit that I was working with. So that kind of set me up to build one of these companies that I ran for about 2 years and then handed over to my business partner. She's now been running it since 2014, and they work all over the world. They have an amazing, massive team of about 40 people, and that organization provides support to women entrepreneurs and kind of gender lens investing, et cetera, et cetera. So that's been a big kind of growth area in the whole impact investing.
That sounds amazing, Tim. All right, something that I want to pick up on what you mentioned there, keyword was entrepreneurship. So can you just define exactly what that means for anyone tuning in who maybe hasn't heard of the term before and too embarrassed to ask, what does an entrepreneur mean?
Well, you know what? It's probably just someone who kind of gives headaches to their budget manager and their line manager. But I think it's also someone that's given sufficient like creative space to large organization. So having a career working and solving problems in an entrepreneurial way within large organizations. But at the same time, you get to a point where the organization itself, even very large, kind of creates a limitation in terms of what, where you can go and how big and kind of how much you can grow that solution. And so, that at that stage around 2012, I decided to step out of a more kind of entrepreneurship type of career and just kind of go it alone. Actually, not go it alone. I've always worked with business partners, so but go it alone from a financial perspective.
With no guaranteed pay slip at the end of the month, essentially. So I'm really curious to hear a bit more about the entrepreneurial approach. So I would love to hear kind of your pros and cons. I feel like maybe the cons are a bit more obvious. So I'd love to hear from you, Tim, more about the advantages to actually exercising the entrepreneurial muscle when you're still within an organization and you're employed. And just while I let you think of the answer to that, I want to just put out a question to the audience as well. If any of you have ever worked for a big corporate, or if you're familiar with the whole entrepreneurship game, Tim, back to you. What are the benefits to that approach?
Yeah, I guess it depends. When you ask about the benefits for whom. So if you're looking at it from a purely selfish point of view, I think the benefits are that you have access to resources. So generally you have a budget. Generally there'll be a problem that has already been identified that needs to be solved, and then you have a certain amount of space to go out and try and solve that problem. So, for those of you that are in the UK or North America, you'll probably be familiar with Oxfam. It's been through its ups and downs over the last decade or so. I was working for a number of years in Latin America for Oxfam. So I had the opportunity to build a few of these kind of internal programs. For one, I managed to close down the whole of their sort of very bureaucratic English-speaking Caribbean program, and set up something that was much more based on a kind of like an online community where local organizations could pool resources and work together to solve their own problems, rather than the normal kind of very traditional top-down programmatic type of approach of these large organizations.
Yeah. So the key, and I guess a very kind of obvious benefit to the entrepreneurship route is that essentially you get to exercise your entrepreneurial muscle on someone else's dime, basically, right? You've also got, I guess, the resource, the manpower, you've got brand awareness. Is there any other advantages to the entrepreneurial route?
Yeah, I think where it really started to count is the support that we would get from a high level. When I got to the point where I wanted to leave the organization and start to build something of my own, one, we had the support of the global head of strategy and innovation, who happened to be on a board of a trust called the Andrews Charitable Trust, which, for those of you in the UK, it's a small trust that owns Andrews Estate Agents, which is the biggest family-owned real estate agency in the UK.
Oh, wow.
They operate in southeast London quite a bit,
Okay.
but they're massive, and they were actually the first investor that we got in my Cleantech company. So I set up a company with my business partner, who I met at work and had been working with for a long time. So there was another advantage of, building partnerships, not only with a prospective business partner, but support from people that had access to, were able to leverage resources, were able to leverage influence and support us. And so, some of those relationships that I built in that environment were critical to being able to step out of that environment and go it alone. And I think from my own experience, one of the biggest reasons that people don't go out and go it alone is because they have a career in a large corporation. And so a lot of people prefer to build their career in a large corporation, a bank, Coca-Cola, whatever it is, rather than saying, you know what, I'm going to step out and do it alone, but I'm going to give up my salary and my benefits and my
It
comfort.
feels safer, doesn't it? And sometimes, especially if you're in a high paying role, it's referred to as the golden handcuffs, right? So
Yeah.
sometimes that comfort can kill you. I want to get real-time feedback from the audience. Please use the chat liberally. Please don't hold back. I really want to hear from you guys who are tuning in right now. Have any of you worked in a corporate? Have any of you had experience of entrepreneurship? Please let us know if any of this is resonating, because we're really curious, as I said, to get that real-time feedback. Tim, back to you. Okay, so really exciting. I have to ask, at this point in the story, what was the biggest shock to the system going from a big corporate to now being a startup founder?
So the biggest shock, actually, that's a good question. Yeah, that's a really good question. I don't know that there was any massive shock, because I spent a lot of time traveling. I had quite a free remit to operate. I think, paying salaries is an important one. I've been paying staff salaries for the last 14, 15 years, including my own. And yeah, it's pretty much first and foremost at the top of your head a few times a month. So I think since I've started the company, paying salaries, paying my own costs, paying salaries for business partners, for early hires that have high expectations and coming in. So that probably the challenge or kind of shock to the system, or the challenge that we had, was how to balance an investment in time into the startup with other, like, short-term revenue generating activities. So we were lucky that by the time we had started operating independently, we were, my business partner and I guess we were in our very early 30s. So we had already have a certain amount of professional experience and so on. We had good network, good relationship with these large organizations, and we managed to get consulting work fairly easily. That allowed us to also kind of break away from those golden handcuffs. But
Yeah.
I have probably, what is it, 10 founders that I'm working with. They all are working and they all have bills to pay. So and most of them are quite young. Most of them are in their 20s. So it's tough to make that switch even at a young age.
Right, right. And how did you navigate that? I touched on your experience with fundraising in your bio as well. Over the period of your entrepreneurial journey, you've raised tens of millions, I read. So how did you go about that then? Like, did you kind of line up the funding before taking the leap? Were you kind of balancing it with the consulting gigs? How
Yeah.
how did you manage that?
Yeah, it was tough. 10, 15 years ago, the impact investing and VC industry was not where it is now. There's also, like, more recently, there's been a stronger alliance between like accelerator programs and investment. So it's the early stage investment industry now is quite organized and fairly efficient, at least from my point of view. Maybe other people have different experiences. But 10, 15 years ago, it was very much more fragmented and very unstructured and not very transparent. And there was also not a lot of investment for very early stage businesses at that time. So we spent, as I said, we spent a lot of time bootstrapping, doing consulting work while we were developing the technology. But I mentioned as well Andrew's charitable trust that took a big punt on us because it was the first impact investment that they had done of
Interesting.
that kind. So it took
And
a
what
lot
do
of
you
time
work?
to, yeah, go
Sorry
ahead.
to just jump in on that one. Sorry, I think I've got a bit of a wonky connection as well. I'm not sure how well you remember, given that this was over, a decade ago at this point, but just really interesting you mentioned that they took a punt on you and was the first impact investment. Do you remember what it was that really appealed to them? Like any
Oh,
specifics?
so what was appealing to them is that they've gone from, like, if you look at the impact investing spectrum, you have sort of just almost purely social benefits, which is almost on the kind of charitable end. And then you've got the financial returns with, some of the blended impact on the other side, and then everything in between. They were very much from the philanthropic kind of charitable funding side. And this was the first opportunity that they had to say, okay, what if we made an investment that delivered a social impact, but also got us our money back? Then we could fund another project and get our money back and then fund another project. So I think there was this whole conversation around leverage, 10, 15 years ago started to become much more important as organizations, and particularly larger organizations, started to see their resources getting constrained. They started looking at, okay, how can we leverage other resources from other organizations so that we can get a bigger impact
Yeah.
ultimately.
Okay.
So that's what we kind of enabled them to do,
And something
basically.
I wanted to ask you, just because we're kind of skirting around the topic, and it was one of the things I was really curious about, is before getting back to your chronological timeline here, is this notion of impact investing, having a really clear, impactful mission with your company, whether it's social, environmental, eco, but of course, it's not a business without a viable commercial model and of course the market there to make it successful. So would love to get your thoughts on marrying those two, right? I feel like today it's not so much profit or purpose. It's very much you can combine the two. But I'd love to get your take on, I guess, not going too far down one direction or another to still make sure that you've got a commercially sustainable business. Does that make sense?
Yeah, and it's an important question because you can go down the route of building a successful business where impact is somehow linked to it. Might have a marketing element to it. It might have a kind of a feel good factor, so that it's about building some feel good into the brand. The way
Right.
that we see it is that, the more that you can embed impact into the core of your product or your service, then the more likely it is to scale as your business scales. So the success of your business is going to drive that impact. It's not going to cause any type of clash or friction. So I've always looked at it that, the product or the service itself needs to generate that impact as part of its core functioning, rather than something that's added or
Yeah.
additional, that's additional to it. So we work with cold storage in emerging markets. So you have an impact of food loss reduction, for example. We build solar components into that and say here's a solar add-on that can power these cold rooms using solar power that's much better for the environment. So then
Yeah.
you have two elements. You have the core element, which is the food loss reduction that comes from putting cold chain into into tropical countries. Then you have the add-on part, which is the solar power. But what we realized is that further down the line, we realized that actually the solar power makes the project very expensive. The relative environmental impact from solar is quite small compared to the core impact of reducing food loss. So, that probably from our own product perspective is an example where like the core of what we were doing delivered that food loss reduction, the environmental benefit and the commercial benefit in one. But the solar add-on, even though it was really nice to have, it wasn't necessary. It wasn't a necessary or critical part to deliver the financial or the environmental benefit that we were.
Interesting. Okay.
But we
So just
dropped
to
it.
yeah, okay, that's really interesting. So just to clarify, I've understood correctly, were the solar panels essentially just too expensive to warrant the eco benefits that they would bring?
Yeah,
Is yeah.
exactly. So yeah, so even if you were using electricity from the grid, that is less environmentally beneficial than solar panels, the actual environmental benefit that you get from reducing post-harvest loss, food loss of your fresh produce, of your fruits and vegetables and so on, the environmental benefit of refrigeration
Yeah.
is substantially higher, like by a
Yeah.
factor of 10 compared to the whole solar power element.
Interesting. I understand.
So
Okay.
yeah,
And
so we
so
dropped it in the end.
yeah, that makes sense. And so lovely to read that Sharif was going to ask you a similar question as well. So, Sharif, please feel free to elaborate, or if we've not quite hit the nail on the head, then please, I'd love for you to expand on that. Just while we're on this topic, Tim, from my
Yep.
side, I feel like you've really clearly explained the environmental benefits with this refrigeration system. However, on the commercial side of things, so bringing it back to marrying those two, so you're saying it's commercially viable business. Is this like, can you tell us a bit more about that side of it? Because it's one thing to go out and save the planet, it's another thing to actually make money in the process.
Yeah. No, it's a good question. So I would say that that business was highly investable because there was a huge market opportunity. There was very little real competition in those markets when we started out in
Okay.
2012. Commercially, it made a huge amount of sense. If you looked at the unit economics of the business, if you're able to reduce loss, you're able to reduce the waste in your supply chain, you've got money in the pocket. So you can calculate that return on investment from buying one of our assets, one of our cold rooms. You can
Mm,
calculate that in quite a tangible way, and so that
yeah.
you can work with the customers to say, okay, if we put this refrigeration into your investment is going to be $100 and you're going to save $50 a year. So 2 years you're going to be paid back. It's kind of a no-brainer.
Right.
So it became very investable because impact investors liked that there was this sort of integrated commercial benefit and environmental benefit. That's kind of the holy grail of what people are looking for. So they want to know that if they invest in a company so I just give you an example with Offgrid.Finance. One of our investors had asked us, well, you guys are financing solar assets. So what happens if you find a really good business opportunity financing diesel generators? Like, why wouldn't you do that if there was a great commercial opportunity to do that? So, it's about having that impact, kind of embedded and integrated within your business model rather than
Yeah.
just as an
Just as
add-on
like
that
a marketing
outside in.
add-on, yeah, which I feel like everyone from a consumer lens, I feel like everyone can see through it as well now if it is just an add-on. So I feel like even just as a responsibility for your customers, you need to really, walk the walk. So you spoke much more on the commercial side of things related to the investors. What about the clients or customers? Who were your clients with this refrigeration example?
So they were mainly farming food and agriculture businesses in emerging markets. So we've sold technology to customers all over Latin America, Africa, even in India, but mainly Eastern and Southern Africa, Mexico, Colombia. So these are companies that are either growing or buying and distributing mainly fresh produce, so fruits and vegetables. So if you go into Tesco's or Sainsbury's, and you look in the tropical section of where they have tropical vegetables, so you'll see like fine green beans, for example, very good example. So most of them will come from Guatemala or Kenya, and very good chance that those companies that have supplied those retailers have been using our technology to refrigerate their green beans. A lot of those green beans are grown by small scale farmers. They're not grown commercially because it doesn't, many different reasons, but those are grown by small scale farmers that have maybe 1 acre, half a hectare of land, grow those beans, supply them to these agricultural companies that package them. And
wow, amazing. So obviously this is a B2B business. So what comes to mind for me as well, and especially listening to you earlier speak about the finances and transitioning from a corporate cushy career into entrepreneurship, I imagine that selling into those B2B customers has quite a long kind of sales life cycle. Correct me if I'm wrong. If so, what did you do to kind of to get those clients coming in, to get enough of them? Was it taking quite a long time for them to convert? Would love to hear a bit about that.
Yeah. So definitely those are issues. The main way that we focused on bringing, like increasing the number of commercial customers and kind of reducing the sales cycle was to offer financing. So we would do asset financing and give customers typically up to 5 years to pay. So if they were spending, I think we were averaging something like 93,000 euros was our average sort of entry level sale price. So we would give them 5 years. So you could imagine, 100,000 euros over 5 years is pretty affordable. So that thing is also very critical for the evolution of the solar industry over the last 10 years. So we've gone from kind of selling solar to now doing, solar utilities and kind of lease to own, et cetera, et cetera. So financing in general has become a big part. If you look at vehicles, if you look at electric vehicles or just vehicles in general in the UK, 95% of all new vehicles in the UK are sold with some type of financing. Obviously, very few people will go out and buy a brand new car for cash. Very, very, very few people. So they'll lease them, or they'll get hire purchase, or they'll rent them, or whatever the case may be. They'll get a loan from the bank to buy it. So why shouldn't that same mechanism apply to accelerating the deployment, the sale of cleaner and more environmentally friendly and sustainable technologies?
I understand. And what I'm taking away from this, and I guess to synthesize for our early stage entrepreneurs listening in here, is really like facilitating that buying process or the investor process as much as possible. So whether it's investors or customers. So if that helps them say yes, if that removes the friction, if that makes it easier for them, then why wouldn't you, right? So I think that's a bit of food for thought for all of you entrepreneurs to reflect on too, is like, how can you facilitate the buying process? So in this example here with Tim is some of that financing to help kind of lubricate things. All right, Tim, should we get back onto your timeline?
Okay, where did we leave off?
So I am not quite sure exactly where we left off, but I think given the time, and as a reminder to everyone as well, I can see some questions coming through in the chat and some hands raised. So I will come to you for the audience Q&A very shortly. So thank you so much for sitting tight. Please keep them coming. Use the chat very liberally. In the meantime, Tim, I guess what comes to me is you have had so much experience in the entrepreneurial game. Do you feel like it's compounded learnings each and every time? Are there some like big one-off lessons, or is it lots of little things that make you kind of smarter, faster, better every time? And if so, can you share some of those?
Yeah, it's both of those for sure.
Okay.
And yeah, I mean, I think as everyone I'm sure on the call has experienced, there's quite a tough learning curve the first time round. And generally there's a few big pitfalls relatively early on. But then at the same time, there's also quite often some really, really important and big successes early on. You know, the first time you raise capital, the first time, you know, you hire a really great person that, you know, that stays with you for a long time, or the first time you have a massive breakthrough with a really important customer. I think those are the things that make it worthwhile. In particular, if you've got clients that are coming back, you know, the famous repeat clients, it's not only good for business, but it's also really great to have that relationship. Even though I'm building a fintech company for the last 3 years, we know all of our customers, and so we can call them to have margaritas when we're visiting town, or we can send them you know, a slightly snappy email if they're late with their payments. But it does give you that kind of personal relationship with the customers. I think, and yeah, okay, B2B, that's always been my preference. And I think that's part of the reason why I enjoy it, is that relationship with the customer where you feel like what you're doing, it's not only a feeling, but they will tell you that, you know, it's been in one example, we're working with a solar company in Kenya. They were able to deliver a huge project, solarizing about a dozen small clinics, small rural hospitals, because of the financing that we had got. If they hadn't got the financing, they wouldn't have won the contract for that project. And these are just four guys that started a small business together, and they've already been able to kind of grow it to that stage. To me, that's the most satisfying thing about building a business, is that you can
That's
not
so
only feel
lovely.
like you're doing something, but you can see the impact that you're having, not only with your customers, but in the work that they're doing.
That's amazing. I love that. Tim, thank you so much for adding such a positive spin to this, because I feel like whenever we talk about serial entrepreneurship and various attempts, I feel like it is very easy and, you know, it's not wrong at all, but in the spirit of one day to look at like the lessons learned. I also host a podcast called Strategy and Tragedy, right? Which isn't just a shameless self plug, but the reason why it's called that is because often the best lessons come from the biggest mistakes. But Tim, I love that you've kind of shared some positivity here. Actually, you need those wins to keep you going. And the beauty of being in B2B, and I'd love to get a show of hands from the audience as well. How many of you are building a B2B business versus B2C? Would love to get to know from you guys, Justin, Dusil, Joseph. And yeah, as you say, it's kind of, I feel like the benefits with each and every new venture, they're quite obvious looking in from the outside. But actually, your point around those relationships, right? Like, it's not just about the lessons learned and the experience. It's like you've acquired more contacts, more connections, you've got those relationships. And that's the sort of stuff that you can't shortcut your way through, right? Like, you can't shortcut your way to having like a best friend, right? Like, it takes years and years and years to develop that friendship to be able to call someone your best friend, right? So I love that. Awesome. All right. So we've got some consumer facing businesses here. Tim, all right, back to you. I think I'm going to ask you one quick question to slide in before coming to the audience Q&A. So given the wealth of experience that you've got across corporates, entrepreneurship, investing, financing, if you could boil down all of that to one piece of advice as a one-day mentor here with us as well, what would be one piece of advice you'd give these early stage founders?
Yeah, it's that was a tough question to work on, and I don't think I have a single piece of advice that's you know, that's really gonna make a big difference. I find that persistence is really key. So being persistent, but not dogmatic, I think might be the word. So yeah, being persistent has been fundamental, and as you were saying earlier, I think that continuity. So building on what works is also really important. So I found that, you know, kind of incrementally, it's important to figure out what's been working and then build on it and try to scale up a lot of the times people fall for this kind of grass is always greener
Mm,
fallacy, where,
mm,
well, if I wasn't selling to this bunch of customers, if I was selling to them, or if I was in that market, or if I was selling this type of product, then it would all be working. And so we
mm.
have this tendency to blame our problems on, things that are happening outside, and then to kind of congratulate ourselves for what we've done when things go well. But
Tim, you
sometimes
beat me
it's
right
worth
to the punch.
yeah, it's worth flipping that around at times. And then, when things go badly, you kind of reflect on what you could have done better rather than blaming your customer. And when you've done well, you can also appreciate that, sometimes there've been people that have helped make it work.
Yeah, it's taking accountability, isn't it? Tim,
Yeah.
completely on the same wavelength. I was thinking exactly that, and then you said it, which is, of course, when things go wrong, we have a tendency to blame others. And then, of course, when it goes right, we congratulate ourselves. So, as an entrepreneur, you are responsible for the good stuff as well as the bad stuff.
Yeah.
But yeah, that mental reframe of using those failures, if you like, as those learning opportunities. What can you learn from that? Okay, awesome. Tim, the time has absolutely flown. So I know that we've had some hands raised, some questions in the chat. So let me just come over here. Shari, if you had your hand raised before, did you want to ask Tim something?
Yeah, you asked a lot of some of the questions and you answered some of them as well.
Okay.
But there's also like a bunch of nerding out because I'm in a related kind of industry with my startup, um, but it's kind of an entirely different approach.
Okay.
So I definitely wanted to hopefully maybe connect and talk further if you're open to that, Tim. But I'm really curious about the specifically we're talking about, for example, if your customers who are in how do you outreach to them? Like what channels work? Because uh, all the most of the traditional channels for B2B and even B2C are entirely different. And then maybe and surprisingly, maybe they're similar, depending on kind of like, you know, whether it's in the West or if it's in developing countries and things like that. So how do you approach that?
Yeah. Yeah, that's been a big part of the learning that I've gone through, and a big part of the journey. I think initially a lot of it had to do with sort of personal networks and referrals. So speaking to people that were connected and getting introductions. So there was a lot of, and really still continues to be a big trust factor, that sort of interpersonal trust factor that's really critical. And I think, yeah, that is a big feature of the B2B industry, I think, in general.
So it's like
So
a warm
that
intro. That's the
yeah,
trust factor, the warm intro?
yeah, and a warm intro by someone with a level of influence.
Kudos. Yeah.
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 So that's critical. That's a layer that's critical and that fundamental, and it's continuous. But in
Mm.
terms of scaling up, actually, direct email marketing for us has always been fundamental. And I know
Interesting.
that a lot of people shy away from it, or they seem to be critical about it. But actually works if you're spamming people, that's different. If you're genuinely offering people something that's of value,
Mm.
and if you put that in front of the wrong person, fine, they'll still see that it's a genuine opportunity, and probably don't get too frustrated about it. But if we've also been able to build pretty good mechanisms for targeting the right type of customer. So we'll do kind of small batch direct email marketing that are highly customized to a very specific set of customers with a specific set of characteristics. So we know that probably at least 70 to 80% of those customers, it's going to be relevant to them, whether they are interested or not, that we don't know yet, but it's going to be relevant to them. And so that's kind of how we do it. So it's not about shooting one big generic email out to as many different companies as possible. It's about small batch direct email marketing that's quite customized and targeted and personalized to that small group.
Tim, that is such a great tip. And I feel like email marketing or email outreach is one of those like underrated tools. Any specific email tools, personalization tools, AI tools, any recommendations you can share with the group?
I mean, we've used just a few different CRMs to great effect. I think people also tend to underestimate or maybe not fully understand the capabilities of CRMs these days.
Yeah.
And
Which
even
ones
even
do you-
something like HubSpot, the amount of automations that you can do with it, it's quite substantial.
Is there
So
much of a learning curve with something like HubSpot?
the learning curve, I mean, if you have a general knowledge of a CRM, the learning curve is it's watch a video. That's the learning that you have to do, and a little bit of trial and error. But we've also been using no-code software, Bubble, quite a bit to build more customized stuff where we need more flexibility. So we do all of our risk assessment. So we finance Cleantech SMEs basically. So we do all the risk assessment, all the loan management, all the impact and monitoring and reporting, et cetera, all through our Bubble app that was mainly developed by my business partner who has a purely financial background, like zero software background.
Wow.
But I'm also seeing the founders that I'm working with keep sharing links of stuff that they use, and I'm surprised. The evolution over the last few years, there's a lot of AI app builders now. So I feel like this no-code stuff, which does have a bit of a learning curve, I feel like that stuff might be overtaken quite quickly by AI app builders.
Yeah, and you say the past few years. I mean, Tim, I'd even go as far as saying even the past 6 to 12 months. I'm so amazed at the new tools that come out there, especially to your point on these no-code tools that my founders as well are sharing with me all the time. Amazing. I also saw some messages from like Jonathan and Justin. I think you both mentioned around entrepreneurship. We were talking about that earlier because that's how Tim began his career. He was more of an entrepreneur within a corporate before making that leap. Did either of you want to come off mute and share any more thoughts or questions for Tim that you had on that?
Yeah, I'll jump in. Thank you, Stephanie. This is awesome. And Tim, I really appreciate a lot of your feedback. Would love to hear more about the entrepreneurship experience. I think I came in a little bit on the latter end, but caught a little bit of that. I think I'm kind of at the tail end of like some entrepreneurship before moving into like solely entrepreneurship. And then I also just wanted a little background on like your funding during COVID. Like, was that based off of, do you think that that was like just an ideal time for your company to get funded? Or do you think it was just a really awesome pitch that you guys had at the time, which clearly was successful? Could you just give me a little bit more information on that?
Love that question.
Yeah, that was a tough one. So we did our Series B so basically we were closing that deal towards the end of 2019 and in the beginning of 2020. So by about March, we were, into legal contracts and so on. We were coming quite close to closing. It was delayed as all investments are, and then lockdown kicked in. So we could have, like many other companies, the VC, the investors could have pulled out. And I'm pretty sure there were quite a few companies that did have that experience. And so, obviously if the investors had pulled out at that time, then we wouldn't have been able to carry on operating, because you're also sitting on 6 to 12 months with very little revenues. So it was critical for us to actually have the investors honor and close that round, even despite the situation that we were in. Of course, we were working in food supply chain, so everyone's still got to eat. So maybe there were other businesses that perhaps didn't also have that sort of like critical nature about them. But yeah, food, medicine, logistics, etc., those are all critical industries. So it worked. We were the lead investor, was an impact investor and so on. So I feel like that was part of their rationale.
Tim, I feel like I feel like that was a very humble response. I feel like it's easy to kind of be like, we were lucky with good investors and everything else. But really, I think just to synthesize for the audience here again is what comes to mind for me is the difference between a paper cut versus a broken leg problem, right? And that's what I'm taking away from that is actually the critical nature of the business in which you were operating made it easier for those investors to still honor that agreement. Is that right, Tim?
Yeah, I think that was part of it. I absolutely think that it was part of it. I mean, there was there continued to be good evidence of product market fit. There was a
Amazing.
strong investment case that we were making for the asset financing. So that was the time when we were really starting to shift from just doing cash sales to doing finance sales. So there was, there should be a significant kind of opening of the market to those types of finance sales.
Nice.
So, commercially, I think most of the investors we're working with anyway, they tend to work on like a 5 to 7 year horizon. So even though everyone was panicking in the short term, they're mainly there for the sort of medium term anyway. So
And just really quickly, if I can be selfish, Justin, by the way, fantastic question. Love the energy. So if Tim's okay with it, then find him on LinkedIn. I have cheekily put your link to your LinkedIn profile there, Tim, if anyone wants to reach out to you. Love that. I would just again, selfishly wanted to ask, you mentioned the magic term there, Tim, product market fit. Do you remember back in 2020, what were some of those specific signals that helped you realize that you had product market fit at that time? Like what did that really feel like in the business? What was that?
Yeah, that's a good question. I think with my latest business, I mean we've just finished the first full year of direct financing with Offgrid.Finance. We finance renewable energy companies, and we've just turned a profit after our first year of direct financing. 2 years of break even, and then the third year turning a profit. And I feel like the product market fit, there's definitely an element of like, you don't have to kill yourself to sell anymore. And I know that's a very basic way of looking at things, but if you really have to kill yourself and struggle on every single sale, it's probably you're not quite there. It doesn't mean that it's going to be, effortless to sell, but there's definitely a feeling of, I don't know if I'm not a surfer, but I have been surfing a few times. But when you pick up a wave and you feel that the wave starts to build some momentum independently of your own effort, I think that's the physiological experience of product market fit.
Tim, you absolutely nailed it. I love that analogy, and I can absolutely vouch for that as well. Sometimes you can just feel how difficult something, and I think once you've experienced the opposite, when you've experienced how easily things are selling and how quickly they're moving, it really does put things into perspective. Tim, loved that absolute truth bomb, pearl of wisdom. We've been getting so many positive messages in the chat. So just before we run out of time, and more crucially, before my battery runs out of power, everyone, thank you so much for joining us. The time has absolutely flown. Feel free to connect with Tim. I'm just giving them I'm giving them a free pass, Tim, on your behalf. I don't even know if you want to keep your LinkedIn private. But I just feel like there's so many more questions. I know that each and every one of you, you've got your own specific challenges, your own individual businesses. And so hope that you've still, taken away something from this chat with Tim. Please scan the QR code on the screen or click the link in the chat that I've just popped in there for a quick little fun quiz to see how much attention you have been paying to our conversation. So let's open it up, give everyone a minute to fill out the answers, and then Tim, you and I will share the correct answers to these multiple choice options. All right, so all right, Tim, the very difficult question of boiling down all of your incredible experience into just one piece of advice. Would it be option A, to get as much funding from investors as possible? Is it option B, to do something that you're passionate about that makes a difference and creates value in the market? Or is it option C, to ignore customers and just follow your gut? Tim, what's the correct answer?
I think it was B, but the other ones weren't too bad, actually. I like the first one. Get as much money for investors as possible. That's
I mean,
not a bad one.
it's not bad, is it? If you can get a ton of funding from investors, that's not going to hinder you. It is option B, of course. Next question: how can an entrepreneur successfully marry passion, mission with a commercial business model? So is it option A, as long as you are planting trees, you have a successful business? Is it option B, following your heart on something you're passionate about will always win? Or is it option C, the benefits must be integral to the business and not just a marketing add-on? Tim, what's the answer?
So that'll be option C. Although again, I like option B. You might not end up with the yacht that you've been dreaming of at the end of it, but as long as you enjoy your life.
I love that. I love that. Option C. All right. Well, hopefully you've all got those answers right. Join us next time. We've got special guest mastering performance marketing, proven growth strategies for startups with Max Epifanov. I hope I'm pronouncing his name correctly. You can scan that QR code to RSVP. And that's it from us. Thank you so much for joining. Tim, thank you for your time and for revisiting the Fireside Chat. I'm sorry that we don't have a real fire, but I would love to get that organized for next time. Really appreciate you coming here, sharing some of your journey. I'm sure that this is just the tip of the iceberg. So thank you so much for coming and sharing. And of course, thank you to everyone tuning in live, engaging with us, sharing your thoughts, your questions. Obviously, this is all for you guys. So we really hope that you've enjoyed this and you've taken something away from this session. All right. Thank you so much, everyone. And hopefully see you next time. Thank you so much.
Thanks so much, everyone. It's been a pleasure, and have a great evening.
Take care, everyone. Thank you so much.